Quick question from Asanka asking us, how can you go about basically predicting what type of news will move the market? So Asanka, thanks for the question. There's two ways that we can use to predict what type of news will be market moving. The first one involves research and analysis that you can find inside the terminal. There's a couple of reports in the terminal, like the tradable sentiment shifts report is one example. That'll give you lots of information on exactly what to look for in terms of possible tradable sentiment shifts coming up in the market. There's also the must-read section where we have the daily risk event outlook report that'll highlight the upcoming data points, as well as upcoming speeches, political events that might move the market. And then we also have the video commentary that basically goes through a couple of examples of potential market movers on a daily basis as well. Now, those will usually provide you with a wealth of information on current important themes that can cause volatility to look out for. Now, of course, apart from that, the second thing we encourage you to do is to do additional research, right? Making sure that you are staying on top of the current drivers across macro. Now, there are also plenty of unexpected announcements that will hit the wires that might not be mentioned in any of our reports. Things that as it happens, you will know, okay, this will have an impact in the market, or it should have an impact in the market based on the additional research that you've done. Just a quick example was from earlier this week. We had an announcement in the newsfeed coming out from the South African Reserve Bank that they actually came out, I think it was on Tuesday, with a surprise rate cut of 100 basis points due to an extension of their current nationwide lockdown for the virus. Now, obviously, we don't include any emerging market currencies as part of our specialization and research in the terminal. But living in South Africa, I always stay on top of the news and the current events and market expectations as far as I can. So when the news dropped that they had a surprise rate cut of 100 basis points, I knew it would mean downside for the ZAR, especially against the US dollar that at that time actually saw some safe haven inflows. So as an emerging market economy, the only thing they really have going for them in times of like this is that basically attracts investors, is offering a much higher rate of return or a higher yield. So by cutting rates by 100 basis points, just after cutting it by 100 basis points just 2 weeks prior as well, I knew that it would be a short-term negative catalyst for the ZAR. So I immediately basically, this candle was the announcement. So I basically just jumped in on that news after the initial candle to the upside, because I knew it would be a sustainable move throughout the day. And basically just rode that out until it reached that next level of resistance. Now, obviously, in hindsight, I should have probably held on to this trade for a little bit longer. The bias was definitely tilted to the upside for the US dollar versus the ZAR. But my point with this isn't to say that you should now start suddenly trading emerging market currencies. It's just an example. The point was that by doing additional research, I knew that it would be market moving, but there was not any expectations, in the market for them to cut. It was just a surprise move that I happened to be prepared for at that time. So apart from going through all the info we have available in the terminal that can move the markets, make sure to do some additional macro research, just giving you a broader sense of what is moving economies, what's moving the markets right now, to give you that upper hand that when something hits the wires, you immediately know, okay, this is going to be market moving. It's something you can jump in or not. So that's just a quick tip from my side. Asanka, if there's any other questions, don't hesitate to let us know.